By the end of the year, Bitcoin's going to be at 140 to 250. So that's December. But I guess the point I'm trying to make is, and this is just a guess, I mean, I've been wrong a lot, probably be wrong about this too, but you have to, when you're a macro guy and you're making investments, you're managing a fund, you got to try to make your best estimate of what's going to happen. And I think the stock market's in trouble, and I think that right now there's a lot of correlation between the high-tech stocks and Bitcoin. I think this cycle will break that correlation, that this will be the time when, the stock market will roll over, and they will come with liquidity to try and prevent the downturn from occurring, and the stocks will ignore it, and Bitcoin won't. Bitcoin will go much, much higher.
The stock market is teetering, tech giants are wobbling, and Wall Street is bracing for impact. But Bitcoin? It's gearing up for the ultimate breakout. Forget the old playbook where BTC danced to the Fed's tune. This time, the game is different. While traditional markets brace for a liquidity storm, Bitcoin is poised to detach from the chaos and rocket into uncharted territory. And here's the shocker. It might not just survive the coming financial reckoning, it could thrive while everything else burns. Seasoned macro strategist Larry Lepard sees Bitcoin reaching $140,000 to $250,000 by December. He acknowledges his predictions haven't always been perfect, but emphasizes this cycle is fundamentally different. The stock market's days are numbered, and the long-standing correlation between Bitcoin and tech stocks is about to shatter. When the inevitable market crash comes, the Fed will respond with its usual liquidity injections. But this time, stocks will remain indifferent while Bitcoin soars to unprecedented heights. This isn't just another market cycle, it's a paradigm shift. The real challenge for investors won't be recognizing Bitcoin's potential, but timing their moves correctly amidst the coming frenzy. As traditional markets falter, Bitcoin stands ready to rewrite the rules of financial survival. The question isn't whether you believe in this transformation, but whether you're prepared to act when the moment arrives. One thing is certain: the old playbook no longer applies, and those waiting for history to repeat itself may find themselves left behind. Let's watch clips from Larry Lepard's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Let me just elaborate on what I think is going on, and it's probably not what Bitcoiners want to hear right now, but so I think if you look at what's going on, where we are in the movie, right, we're at the point in time where the U.S. stock market is about to roll over. It started rolling over, broke through some critical resistance, and we're in a little bit of a bounce right now, but I think we're about to have another leg down, and this is all being driven by the Trump policies, the tariffs and kind of the disruption stuff he's doing, and the market doesn't like uncertainty. There's a lot of uncertainty. So, and the market is very overvalued using any historical measure. So I believe we're about to enter a market downturn, a fairly significant one. It's kind of down 10% from the top. I think we could easily go down 20 and maybe even 30 or 40 over the next few months. And if that's the case, that's a negative liquidity event. Stocks get marked down and people feel less wealthy, and it's a cyclical thing for the economy, et cetera. And so typically when that happens, all asset prices go down because people have to sell to meet margin calls, so on and so forth. And as I was saying to Nico pre-show, Bitcoin's not immune from this, sadly. It is sound money. It should be a safety bid, but it won't necessarily get a safety bid. And so I'm actually of the view that, just to cut to the chase, that we could see a lower Bitcoin price before we see a much higher Bitcoin price. And by that I mean maybe something in the high 70s, something starts with a 70, which I know is not what people want to hear. But I think it's possible. If it does happen, I don't think it'll last for long. And the reason I say that is that the Federal Reserve has already started to indicate they're going to loosen. They reduce the amount of quantitative tightening that they are doing from $25 billion a month to $5 billion a month. That's a big cut, and a concession, I think, on the part of Powell to help Trump out. And I think that when the market rolls over the way we're describing, it won't be long until the economy and employment and all the other indicators start to indicate softness too. And even though they haven't really licked inflation, they're going to look beyond that and just say, well, okay, time to get more aggressive about cutting, and they're going to cut. And when that happens, then Bitcoin's going to go the other way. This is really a big tell. Will be when this stock market rollover occurs, watch what happens to the U.S. 10-year. Do interest rates go up or do interest rates go down? And the reason that's important is that if interest rates go up, that implies that they really don't have enough money in the system and that they're going to have to go to QE and yield curve control more quickly. I mean, typically, history shows that when the stock market rolls over, the bond market ought to get a bid. People who are selling stocks, they go to the safe haven of bonds. If you're going to have a downturn, you're going to have a recession, you want to lock in a yield. That has not been happening recently. The first 5% down in the stock market, bond market caught a little bit of a bid, and yields came down a bit. Second 5% down, the bond market went the wrong way. And I think this time, I think people are beginning to figure this game out, which is that we are in a sovereign debt crisis, noted by $3,000 plus, almost $350 gold, and Bitcoin, was at 106, admittedly down from that, but still both record highs within the last few months. And to me, those are both signals that the government is slowly but surely proving they can't solve this problem. And I think the reason the market's done as well as it's done right until now is that there's kind of a false belief that the Lutnick camp and the Musk camp and the lovers of Trump, and by the way, I don't hate Trump, I just don't agree with everything he does. The lovers of Trump are kind of, they've got a lot of happy talk going on. They we can land this plane. It's going to be okay. We can cut back this expense. We can, get the bond market down. I mean, they're talking about doing a lot of things that if they could do them, it would be a miracle. And so I think what's going to happen is it's going to become clear that that miracle is not likely to happen, and that they're going to need help from the Fed to do it. And we all know what help from the Fed means. Help from the Fed means printing money, and printing money means Bitcoin and gold continue to go up. Look, the markets are just so distorted that, and look, I'm really glad Trump won. I mean, it's so much better than the alternative. But, I don't think God himself could solve this problem. I mean, they handed him a pile of shit. They really did. And, the deficits, Doge, Doge is trying to do the right things, but it's going to be too little too late. And so my view is just, there's no way to get around the fact that the free money bubble that, got created post 08, and then again worse, even more in COVID, when we grew money supply 40%, went to 0% interest rates. I mean, the chickens are coming home to roost, right, for that action. So
Trump's chaos, Fed panic, and a coming stock crash could briefly drag Bitcoin down to $70,000. But here's the twist. When liquidity vanishes, the Fed will flip the money printers back on. Bitcoin is on the brink of a monumental surge. As gold climbs and Bitcoin remains resilient, the signals of an impending sovereign debt crisis become undeniable. With no soft landing in sight, only fractured markets and desperate money printing. The dip is merely a brief interruption, while the rebound will be a force to reckon with. When the system collapses, Bitcoin won't simply rise, it will rewrite the entire playbook. The Fed's monetary turmoil has sparked inflation, frustration, and a looming market crash. Trump's policies are speeding up the inevitable reckoning, with stocks poised to drop 40%, threatening retirement plans. The AI bubble echoes the dot-com boom, while tariffs continue to burden consumers. There's no soft landing in sight. The impending debt crisis calls for a painful reset. As trust in the system crumbles, Bitcoin emerges as the escape route. According to Larry Lepard, the great monetary reckoning is upon us. But the big question is, will you hold on to failing systems or embrace sound money? Let's watch more clips from the interview.
A year ago, I was watching Blue Team debate Red Team, and I just felt like this is insanity. They're arguing about all these things that do not matter. And there's one underlying thing that really does matter, which is inflation and control of the money supply. And you've got a Federal Reserve that at the extreme sets interest rates at 20%, Volcker, or 0%, Bernanke, or again 0% with Powell, and they're just out of control. I mean, it's like they're bouncing off these guardrails of inflation and deflation. And so, to me, that's what's causing all the problems. That and the inflation are why everybody's so upset and angry. And everybody's really hurting. I mean, the bottom half of this country is getting smashed. Even the top half of this country, is getting hurt. But they've got more resources with which to cushion it. But sadly, I think the markets are about to come after that as well, because for all these people who are sitting in the stock market, feeling good about life, basically Besant and Trump have said, we don't care about the stock market. We care about American jobs. We care about the American worker. And most American workers don't own stocks. And we care about the bond market. And so that's a big, big shift in policy. We haven't seen anything like that in a long time. And I think, I think that's the right way to go. But here's the point I would make. I think a lot of people believe that you can just gracefully deleverage this big bubble and get out of this without there being some disruption and some pain. And from my experience, having lived through as an investor 2 of these big bubbles, '08 and 2000, that's just not the way it works.
Yeah.
You know, when it turns and a bubble bursts, there's been a lot of misallocation. I mean, look, AI, it's going to make our lives a lot better. I get it. It's really important. But AI reminds me of the internet, you know, the routers and Cisco back in 2000. There's been way too much capital put into AI. These valuations are nutty. And, you know, history always shows that these kind of extreme valuations correct back to the mean. And so when that happens, I mean, imagine your average upper middle class family that has a lot of their retirement in stocks. Imagine, you know, take those stocks down 40%. They're not going to be feeling so great. You know, they're not going to necessarily go buy that new car, take that vacation, you know, buy that rental property, whatever it is they might have done. And in fact, we learned this morning, I thought it was pretty interesting, Trump's definitely going through with these automobile tariffs. So, you know, you're buying a car from Europe, guess what? Guess what? You're going to pay 25% tariff on top of it. So,
wow.
Yeah, I mean, and he's serious about this stuff, and arguably rightly so. I mean, I'm not criticizing the policy. I'm just saying, to think that we can do these policies and not have something break is, in my opinion, just not being realistic about the mathematics of what happens when you push on one thing, another thing happens. You know, I mean, people ask me, is there an easy way out of this? I mean, there's no easy way out of it, but there is a fairer way out of it, which is more of a debt revaluation, a debt reset. I mean, the problem is we've got too much debt as against the underlying assets. And I would highly recommend that everybody listening who's really interested in the subject and understanding it more clearly, because he and I are completely aligned, take the time to listen to the pod that just came out between Luke Groman and Danny Knowles on what Bitcoin did. Brilliant hour and 15 minutes, lays out just what we're describing here in greater detail, obviously. I mean, it's you know, they are in a position where they really don't have that many good choices. And so, you know, and almost all the choices other than a collapse, which no one wants to have happen, are inflationary.
Yeah.
And so, you know, as the book advocates, there is a way out of this, which is a one-time large inflationary event and a reset to sound money. And that would make the world really good. The inflationary event itself would be very painful. There's no way to, you know, there's no way to get out of a sovereign debt bubble without collapsing the value of that debt. So people who own long-term bonds, they are going to suffer by definition. It has to happen. But you know, history shows that in monetary resets, when you do reset and you get back to a sound money standard, things get better.
Yes.
So, you know, my argument would be if we had really enlightened government, they would tell everybody this, they would explain it, they would try to make it fair, they would do it one time, it would suck, and then on the backside of it, we'd all recover and we'd operate in a sound money world. You know, sadly, that's not the way governments work, right?
Yeah.
You know, they're going to wait until there's a crisis, right? And then, you know, they're going to cobble together some solution. The first one probably won't work, and then they'll try something else, and that won't work either, and then eventually they'll get to the right solution, which is a sound money solution, right? Yeah. So that's kind of, if I had to guess, that's how it's going to go, right?
Bitcoin's surge past $86,000 this week comes at a critical juncture, with analysts divided on whether the rally can withstand looming U.S. tariff announcements. The cryptocurrency showed impressive resilience, bouncing from key support levels as traders watched for a potential breakout from its 10-week downtrend. Technical analysts highlight bullish signals, including Bitcoin's position relative to crucial moving averages. The consolidation between the two bull market EMAs continues, noted Rect Capital, suggesting an impending breakout. However, macroeconomic headwinds from proposed trade tariffs could trigger an 11% pullback to $76,000, according to Swissblock Research. This tension between technical strength and macro uncertainty reflects warnings from market veteran Larry Lepard about coming volatility. While Bitcoin has historically reacted negatively to tariff news, its long-term trajectory may ultimately depend on the Federal Reserve's response to any resulting economic turbulence. The coming days will test whether Bitcoin can maintain its role as a hedge against traditional market instability or succumb to short-term selling pressure. With light positioning in the market and no clear catalyst for upward movement, traders remain cautious despite the promising technical setup. As with previous cycles, Bitcoin's true breakout may require a more substantial macroeconomic shift to gain sustainable momentum. As we wrap up, Bitcoin historically dipped on tariff news, but do you think this time will be different? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.